Okay, good morning and welcome back everyone to our Tuesday morning market outlook session. My name is Tony Zhang. I'm the chief strategist here at Options Play. And things have turned around a little bit here over the past week or so ahead of the inflation numbers that were just reported a couple of minutes ago. And what we want to talk a little bit about is how equity markets have shifted a bit in terms of improving in terms of market breadth, and as well as just looking at the fixed income data that has shifted quite a bit over the past few weeks with respect to the inflationary debate that markets have been contending with over the past month or so. So let's go ahead and get started. But before we do, what we're going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So we'll start off as we normally do with taking a look at equity indices and seeing where they currently sit. Like I said, things are starting to improve a little bit here in terms of how equity markets are starting to shape up in terms of market breadth. So we'll discuss some of that. Then we'll take a look at some of the commodities. We have seen some of the commodities pull back a little, show some exhaustion. So it's important to see kind of how markets are reacting, and as well as interest rates. Looks like the markets are reacting somewhat negatively here over the past few minutes with regards to the inflation data that just came out 2 minutes ago. Then we'll take a look at the sector rotation data. We'll look at the inflationary numbers and share with you some of our ideas for today. So let's go ahead and get started. But the primary question that many investors are paying attention to, at least for today's market, is really what can we expect with the inflationary numbers that are being reported here today. Let's start off by looking at, looks like the inflationary, June inflation came in at 5.4% versus the 4.9%. It's a little higher than expected. So as I said, our market's reacting somewhat negatively here at the moment to that. So my name is Tony Zhang. I'm the chief strategist here at Options Play. And what I want to share with you are my technical charts, my economic research to help inform our decisions as to where the current markets are trading right now. So when we take a look at the S&P 500, the weekly chart very much in a strong upward trend, both on the daily and weekly chart. Daily chart continued to break out to new all-time highs here yesterday, but we're starting to see a bit of a pullback here this morning on, again, the inflationary numbers that just came out here a couple of minutes ago. However, markets, while reacting initially negatively, giving back most of those losses here in the past few minutes. So far, we're still holding above what I would consider a fairly major support level here. A fairly minor support level on this breakout here. And we'd like to see markets to hold that level and continue to move higher in order for this bullish trend to remain intact. Otherwise, if we start to see some further downside, the major resistance level that we're paying attention to here is 425. If we break below 425, then we're going to likely see more sideways markets here for the S&P 500. When you look at the NASDAQ has put in a small double top here, and we'll likely have to see how markets react today to those levels as to whether they break out higher here. A breakout higher here would certainly look at a continuation higher here. The NASDAQ so far not reacting very heavily here to the inflationary data. And then when we look at the small caps, Russell 2000, it remains in this range bound sideways action, if you will, since the beginning of the year, and remains in the sideways wedge, if you will, looking for that potential breakout, but so far no signs of that at the moment. When we look at the Dow Jones Industrial Index, this is the portion of the market that is starting to see quite a bit of improvement here over the past few days as it starts to contend with the recent highs that we had back here in May. We've been talking about the fact that the S&P and the NASDAQ have made new highs, but most of the other markets have not made a new high since year or May for the Dow Jones. We're starting to see this breakout to potentially a new high. And if the Dow Jones starts to confirm these new highs, that certainly points us to an equity market that is continuing to improve, while we've been talking about the past few weeks how there's been a fair amount of narrowing of the breadth of market breadth, a lack of participation in terms of the broader markets. But if we start to see the Dow Jones breakout to new all-time highs, especially if we can see the Russell 2000 also confirm those breakouts, that's really where the equity markets can start to gain some legs and continue its bullish trend here. So things are starting to improve a little bit, as well as the RSP, the equal weight S&P 500 index, just a few shy points of breaking out to new all-time highs here as well, and confirming a continuation higher here. So it's really a combination of seeing these things that are starting to see some market conditions improve going into the markets here today. The RSP still hasn't broken out just yet, and the inflationary numbers, we'll see how markets react, but a breakout here above 153 would certainly be bullish here for the broader markets. So overall, U.S. equity markets improving a little bit from what we've seen last week. Overall, still showing signs of exhaustion, still lack of market breadth, lack of conviction of this continuation higher here. But if you look across the world, equity markets have been fairly flat. If you look at EEM, actually fairly weak here. So U.S. domestic equities actually stronger than most of the global equities that we follow here. And then the 10-year yield, which is really the major shift that we've seen here over the past month or so, yields have declined from about 160 basis points to 135 basis points here. So we're really interested to see how 10-year yields react to the inflationary data from today, to get a better sense for how equity markets are going to trade going forward. And then when you look at the commodities, and this is really where we start to see a bit of a slowdown in terms of the continuation higher we've seen on many commodities that have also driven the inflation, some of the concerns that investors have had around inflation. Everything from crude to lumber to many of the commodities that we track for the raw materials for consumer goods have started to see quite a bit of exhaustion here. So crude, as you can see, failed to move significantly higher here over the past week or so, despite OPEC not reaching an agreement to increase supply. We see this in gold. Gold has not really pushed higher here, but it has managed to hold this 100-day moving average here, but it still remains below this 172 gap level here. We'll likely have to see how gold contends with this gap level, if it gets there and gets rejected and more sideways motion, or rather it fills that gap and continues to move higher up to that 178, 179 level. So these are all important things to pay attention to here right now, but the inflationary numbers from today certainly lead us to believe that we could potentially see some upside here for some of these commodities. Now, when we look at sector rotation, this is really where, as we talked about here over the past few weeks, the lack of rotation has been fairly concerning in this market rally, because a healthy market rally needs to see a fair amount of rotation between leading sectors versus lagging sectors. But for the past few weeks, we have pretty much seen technology, discretionary, and healthcare remain in the leading category, and all of these other sectors, real estate, energy, utilities, consumer staples, industrials, financials, materials, have all been either in the weakening or lagging category. But over the past week or so, we have started to see some rotation here. None of them have actually shifted in terms of from leading to lagging, but we have seen consumer staples, industrials, financials, and materials move into the improving category. So this is really the start of some rotation. It's not convincing enough, but it certainly is rotation moving in the right direction. So if we start to see further declines here in these three strong sectors, and we continue to see some improvements in these four weaker sectors, that certainly would be encouraging. And so far, financials slowing down a little. We saw JP Morgan earnings coming out this morning, and the stock reacting somewhat negatively to that on the back of weaker trading revenue. And many of the major banks have been able to supplement the decline in trading revenue with deal flow. However, not every bank is going to be able to offset their trading revenue decline with deal flow. So this is really where financials is starting to look a little weaker here, but we do have utilities and real estate coming back online. So we're starting to see a fair amount of rotation here in the markets. Not quite there as to where we would like to see it, but it's certainly starting to see some improvements, if you will. And if we look at the individual sectors themselves, a few that stand out to me are materials to begin with. We've seen this significant decline in materials, finding this support here around this $81 level, which also corresponds with the 100-day moving average, and has now managed to break back above the 21-day moving average. And that is, in my opinion, the potential for a continuation higher here back into this $89 high, which is put in here, which we put in this triple top here at 89 back here in May. So materials continuing to see some improvements, both on a momentum and relative strength perspective, but also now from a technical perspective, breaking out from this range that is established here over the past few weeks, starting to break out higher and above the 21-day moving average, showing us the trend has started to shift a little bit more to the upside. And we see a similar type price action here in industrials. Industrials, after pulling back not as far as materials, holding this 100-day moving average as support, has managed to now break back above the 21-day moving average and has the potential of revisiting this 106, 107 double top that we formed here again also in May. So materials and industrials, two very similar sectors. Industrials a little stronger here currently than materials. And then lastly, if you look at financials, this is really where, despite having a very similar setup, this is one that we have to pay attention to, because the banks from a fundamental perspective doesn't look particularly strong. You have declining interest rates, you have a flattening rate curve, and we have a fairly strong reduction in trends in trading volume and trading revenue from the banks, and that's likely to lead to some downside pressure. We've seen even the best of breed banks like JP Morgan this morning report earnings that was fairly strong, but the markets have reacted fairly negatively to those reports. So financials, especially with a heavy earnings week, could see a little bit of weakness here going into this week. So this is one that I would pay attention to. I'm less sure of a breakout here for financials, especially from the reports that we've seen from JPM, which have been historically very strong, starting to see some of that slowdown, starting to see markets react somewhat negatively to those reports. So now let's take a look at some of the inflationary numbers. So like I said, we just saw the report here this morning at 8:30 a.m. where June inflation came in at 5.4% month over month versus the 4.9% that was expected. We have 5% last month. So this is really where we start to, dissect some of these inflationary numbers. There was I would say that the equity markets and the fixed income markets were expecting perhaps a little bit further decline in interest rates. We've now seen an uptick in interest rates. This continues the debate, if you will, of whether the inflationary numbers that we're seeing is more transitory or permanent. And I think today's market reaction so far is probably showing us that it's a bit less transitory than markets have been pricing in over the past couple of weeks. So currently trading at 136 basis points in terms of the 10-year yield. Likely that is perhaps showing a bit of a bottom here around interest rates. We might see interest rates climb as a result of the inflation data that came out here today. But the one thing that I do point out here is that commodity prices have started to reach signs of exhaustion, signs of a bit of a capitulation towards the top, and we're starting to see some momentum and relative strength decline here for commodity prices. So when you look at the jobs data that came out here last week, that really drove fixed income markets to price in lower inflationary concerns, and then you mix them with the CPI numbers this week. This is really where the debate still remains, I would say, open. And interest rates so far not moving a whole lot here to the report here this morning. And like I said, financial markets, while selling off initially on this news, has given back a lot of the initial sell-off here. If you look at TLT, largely unchanged. If you look at SPY, it was down about a percentage point, pulled back quite a bit here, and even just in the past 15 minutes that we've been talking. So it seems like financial markets largely shrugging off what is a higher than expected inflation number from this morning. So as we look for opportunities here in this market, we have to keep in mind the bigger picture, which is the fact that equity markets remain in a bullish trend, regardless of which index that you track. The internals of equity markets are starting to see a small amount of improvement, whether you're tracking the sector rotation, whether you're tracking market breadth, whether you're tracking advanced decline lines or number of stocks trading above its 50-day moving average. We continue to see these metrics improve. They're not quite where we would like them to be, but the improvement we've seen over the past week is what gives us a little bit more confidence in the current bullish trend that we're in. So as you look for opportunities here in this market, over the past few months, we've seen a lot of stocks that are incredibly strong from a fundamental perspective pull back substantially in the weakness that we've seen. And some of these stocks have started to find a little bit of ground and started to show a little bit of improvement and finish a bit of a bottoming formation. One particular stock that stands out here is Taiwan Semiconductors. Going through the recent drought that we've seen here in Taiwan has created quite a bit of weakness here in terms of TSM, as well as just the general semiconductor index showing a little bit of weakness here. But this is really where we started to see some improvements here over the past few days, and TSM is starting to break out here above this range that it formed in this bottoming formation that it's been in since early March. So this is a potential opportunity to the upside here for TSM up into this 142 all-time high level, which we put in here in the beginning of February. So you have a very strong stock that has spent a bit of time pulling back and consolidating and has now formed a bit of a bottom and is now likely to continue its move higher here. So these are the types of opportunities that we prefer looking at, as opposed to looking at stocks that are trading at all-time highs or starting to break to all-time highs. Those are the ones where the risk to reward does not favor further upside. You want to look for stocks that are strong fundamentally, that have pulled back here and is now. So TSM certainly a fall. Another one that we were showing you before is industrials. Industrials pulling back, starting to see signs of improvements here, and we're starting to see that here for John Deere. John Deere, very similar price action here, pulled back from 400 to 320, putting in a bit of a bottoming formation here, and is starting to potentially break out higher here. John Deere still in the early days, I would say, of this bottoming formation, not as strong as Taiwan Semiconductors, but certainly as you look for the improvements in infrastructure, as you look for the improvements in sectors, industrials stand out, and John Deere, one of the leaders in this particular space, and from a fundamental perspective, from a technical perspective, looking for a continuation higher here up towards that $400 area. And lastly, when we look at the technology team, when we look at the technology sector, what we see are strong stocks like Team at Adelson, breaking out recently above this $260 level here, and it's spent a bit of time forming a bit of a base here between 260 and 270. And this is the opportunity that we see where it has pulled back multiple times to this level and can continue moving higher here after forming this base here above that 260 level. What we're looking for is the breakout, a pullback to retest the level as support, and then looking for that continuation higher here. So when you look at technology names, looking at names that have strong fundamentals, or rather quality, if you will, within the technology space is really some of the features that I look for when you seek opportunities. And then when you're looking at these types of stocks from a timing perspective, stocks that are breaking out to new all-time highs and chasing those breakouts is sometimes tough from a risk-to-reward ratio perspective. But when you can see a base forming above a major support level, as you have seen here in 260 on Team, that's the potential opportunity where the risk to reward ratio is favored, or is skewed in your favor, because you have a lot more upside. And if it does break down below 260, then you would cut your losses. If it went down to about 250 or so, I would cut my losses. So you're looking at about $10 worth of downside, and you're looking for potentially far more potential upside here. If you see this trading range that broke out from was between 210 and 260. So that's a $50 range. So you're projecting up to about 310 or so to the upside on team, while you're risking just about $10, $11 here to the downside. That's the type of risk to reward that favors the current market conditions that we are in with a stock like team. So with that, that covers what I wanted to share with you here today. Like I said, overall, what we've seen here in the broader markets is the fact that despite concerns around market breadth, despite concerns around the health of the current market rally we've seen over the past 3 to 4 weeks, it is starting to improve a little. We're not quite where we want it to be to have full confidence in this market rally, but overall, the picture is still very bullish. The internals are starting to improve, and those are the things that you have to pay attention to. And especially with the inflation numbers, at least as of right now, when you look at the equity, when you look at the fixed income markets are still pricing in at this point a more transitory view on inflation, even with the inflationary numbers that came out here this morning. So with that, that gives us a little bit more confidence here in the upside view, or the bullish view here in equity markets, and we will continue to provide this type of picture, if you will, week to week, so that you can stay on top of everything from equities to the fixed income markets, and how we are taking those data points to inform our decisions. So with that, thank you so much. I hope you guys have a great trading week, and I'll see you guys here next Wednesday on our next Tuesday on our Tuesday morning market outlook session, but also next Wednesday on our next options education session, so that you can learn more about how to utilize option strategies to enhance your equity positions or enhance your equity investments. So I look forward to seeing you here next week, both on Tuesday and Wednesday. Thank you so much, and I hope you guys have a great trading day.